to the finance panel of IIM Shillong's Business Leadership Summit. The
Okay.
decade that began with us reeling from an unprecedented financial crisis ends with an unprecedented crisis of health. Between these two events, we have seen our country go through several structural changes aiding growth, be it the digital payments push from demonetization or the consolidation of taxation policies, courtesy of GST. India's GDP grew by a whopping 56% over the last decade. But what does the next decade have in store for us? As we draw to a hopeful end to this pandemic, India is uniquely positioned to take advantage of the numerous economic opportunities that have risen out of it. The rising entrepreneurial talent of the country promises to build companies that will be the future of finance. New technologies promise to make existing processes simpler, faster, and cheaper, opening up new avenues to promote financial inclusion. But the road ahead seems to be a challenging one. After almost 2 years of extraordinary monetary action, it is finally time for the great unwind. It is yet to be seen how capital markets will react to these turbulent times ahead. And to help us understand and navigate these times better, we have with us today an esteemed panel of speakers with a combined experience of over 100 years. Our discussion for today will revolve around the changing contours of digital India in the new normal, a panoramic view of financial services and investing strategies amidst its mammoth evolution. Now, introducing our first panelist for the day, Mr. Vineet Narasimhan. Sir is a product expert with almost 2 decades of experience building cloud and mobile solutions. Sir heads the technical team at Crystal AI, a global wealth management fintech based out of Singapore with operations in India and the Middle East. A gold medalist from IIM Calcutta, his previous work experience includes Mass 360, where he helped transform the company into a leading enterprise mobility management solution, which was acquired by IBM Securities in 2013. Of the multiple offerings he helped build at Mass 360, 3 have been patented in the US. Sir's experience defining and designing customer journeys comes in handy at Crystal AI, where he, along with his team, are responsible for building the tech backbone for seamless global investing. We welcome you, sir. Next on the panel, we have Mr. Sanjay Guglani. Sir is the founder of the Silverdale Group, Director and Chief Investment Officer of Silverdale Fund VCC, and Director and Chief Executive Officer of Silverdale Capital Limited. Sir has over 30 years of investment experience, managing over $1 billion across a dozen funds. Silverdale funds have been among the top performing funds globally, winning several accolades over the years. Earlier, as Managing Director of Silverdale UK, his firm channelized over $4 billion of investments into emerging markets, including in joint ventures with Goldman Sachs, Morgan Stanley, and Lehman Brothers. He was key to creating credit derivatives and the convertible bonds market for Indian midcaps. Sir is also a frequent guest lecturer at various business schools in the UK, India, and Singapore. His expert opinions are widely sought by the media, from the Wall Street Journal to Economic Times India, from CNBC to ET Now. He has delivered presentations at several forums, including at the United Nations. By qualification, Sir is a chartered accountant, management accountant, company secretary, and Sloan Fellow of Management from the London Business School. We welcome you, sir. Now, I'd like to hand over the stage to my colleague Unnati to introduce the remaining panelists.
Thank you, Akshat. So next on panel, we have Mr. Raj Khosla. Sir is a thought leader in the Indian retail banking and financial services space. With more than 3 decades of hands-on experience in the BFSI industry, Sir has materially uplifted the awareness of financial investments while offering tailored financial products to Indian customers as well as small businesses. He is a chartered accountant, CPA by profession, and also a major in economics from SRCC, Delhi Universities. Sir advises several banks and financial services companies on their distribution strategies and is a highly regarded figure when it comes to the origination and distribution arena of financial products. Having spent a sizable time in the industry, witnessing various transformations within the sector, Sir has perceptively capitalized on the applications of information technology and big data. We welcome you, sir.
Thank you. Thank you.
Our final panelist for the day is Dr. Bhaskar Das Gupta. Sir is the Associate Director of Business Development at Abu Dhabi Global Markets, focusing on financial services across emerging markets and Europe. Sir oversees the development of new age businesses in the areas such as asset management, private banking, crypto assets, fintech, and sustainable finance at ADGM. Prior to joining Abu Dhabi Global Markets, Sir was the Chief Operating Officer of UK Export Finance at the Department of International Trade with UK government. Sir's 25-year career spans transformative roles in investment banking, transaction banking, technology, and consulting with firms such as HSBC, ABN, AMRO, Citigroup, and PwC. Sir holds a BSc in mathematics and an MBA in finance from Indore University, a PhD in financial modeling and AI from University of Manchester, and PhD in politics from King's College London. We welcome you, sir. Lastly, I welcome our moderator, Dr. Neelam Rani. Ma'am is an associate professor in the area of finance. She is a Fulbright scholar. She holds a PhD from the Department of Management Studies, IIT Delhi, in area of M&A and corporate governance. Ma'am got a Fulbright doctoral and professional fellowship at Rutgers Business School, the State University, New Jersey, Naval, USA, and also has been an exchange scholar under the bilateral framework at Thammasat University, Thailand. Ma'am is a recipient of various awards such as NSE Prize for Best Thesis in Financial Economics, Outstanding Papers by Amity International Business School, Indian Institute of Capital Markets, IIT Roorkee. Ma'am has also co-authored a book on mergers and acquisition published by Springer and has published paper in journals of international repute. We express our sincere gratitude to Ma'am for moderating this panel discussion. Neelam ma'am, the stage is all yours.
Thank you, Unnati. Thank you very much on this bright sun day. Having such eminent experts with us is really, I'm quite happy and excited to welcome you all. And in addition to that, financial industry itself is witnessing a lot of transformation, a lot of new changes, a lot of new products, technology for good, making the financial services available to the wide spectrum. Despite of COVID, some section of the industry has really performed well, but as yesterday we were quite concerned about that 90% of the resources are with the 10% of the wealthy section of the society, and the other panel was quite concerned about the disparities we have. So given those concerns, financial services sector can really help to create an inclusive society where we have the equality in the access to the resources. There are certain sections which had not performed well in the last year, but there are certain sectors which have really performed well. CNBC News recently concluded that a bank, Swiss bank, Society Generale has given the best performance over the pandemic years. So the scenario is positive as well as having some concerns. So within that, when the experts, they come and deliberate on such issues, we are bound to find good solutions and thoughtful input for the betterment of the society and in general, and the businesses in the particular, for everyone in general and for students in particular and the academics in particular. So I welcome you all. As recently we have observed a lot of transformations. Digital transformation has really changed the way financial services they used to perform and work. So I would like to begin with Mr. Vineet Narasimhan. Sir, how do you see the changes in the current market's infrastructure during this unprecedented time in the context of financial domain? And as we have grown as an economy, the demand for wealth management services, along with the appetite of the investors to invest in domestic and global risk assets, is set to increase too. So how can technology enable domestic investors to take advantage of the investment opportunities worldwide? So I would seek your suggestions, sir, seek your inputs here. Mr. Vineet.
Thanks a lot, ma'am. First of all, would really thank everyone for inviting all of us to this session. And it's a great day to be here. It's nice and sunny in Bangalore here, where I'm based out of. Right. So with that background, right. So there are three things which I want to kind of touch upon which I believe is instrumental in what is happening in the Indian context today. Right. Let me start with that, and I'll touch upon specifically wealth management industry as we see it, because that's a domain where I have a better background and handle on. The first of all, what I see is the technology juggernaut, which has really started off, right? It's almost impossible to stop that, right? So we keep hearing about crypto, everybody deliberating it, but that van has already started, right? So, and everybody is just jumping onto that van. Government is thinking of different approaches to figure out, regulate that, but we all know the number of people who are involved in that market, and that is just one of the examples of like how technology juggernaut is really hard to stop and manage, right? But technology also has additionally a lot of benefits when it comes to financial sector specifically, right? So if you look at how easy it is to open a bank account, a Jandan account, or even an investment account, right? It's almost unimaginable about even 3 to 5 years ago that it's going to be so easy. In a matter of few minutes, today accounts are opened and people can start either saving their money or even in case of investments, they can go ahead and even make their investments, right? So that is really where the power of technology comes in and making it accessible for everyone, be it anywhere across nook and corner of the country or even today across the world. The second thing, other examples of technology is something like UPI, right? Where the power of money transfer, how easy, how seamless it can be is kind of self-evident. We don't have to kind of preach that more and more. Across the world, it is accepted as really a model for everybody to follow. And that's the power of the technology coming into the fore and in the hands of people. Right. So beyond that, really, there are other examples of technology which is making things which are accessible, right? So just simple things like advancement in UI technologies today to enable anyone easily build applications and make it available to a large number of people, right? So you can see that you have hundreds of applications of different types, right? Not just the core banking applications, but also all the neo banking applications, neo investment applications which are being built to make it lot more easier for people to use and accessible for people to use, right? So that's where even simple technology innovations are making a significant change and impact for the users. Then comes more sophisticated technologies like blockchain, which people are trying to figure out. So we don't have very good use cases yet. There is one or two here and there, but everybody believes that that will really transform how today industry, especially financial industry, is working, right? So I came across recently a use case where the entire gold trading was kind of getting moved over to blockchain, and it was backed by a big exchange in India. So you will see those use cases becoming more and more commonplace and more effective as well, so that the common man starts seeing the benefit of it. So this is one aspect of the entire technology phase, right? The second thing is the regulators who are kind of catching up along with technology. They are becoming more technology savvy, right? It is worthwhile to note the steps which even RBI has taken to launch concepts like sandbox by taking over from other places like Singapore and more advanced market to empower technology innovations to become more mainstream. Otherwise, these would have been really very corner use cases here and there. But now RBI, regulators like RBI and even SEBI are enabling some of these technology innovations to go mainstream. Right. So that's a positive thing in the right direction, because you do need that momentum behind to really push this entire thing. Right. And lastly, the one thing which I do want to touch upon is around really how we kind of look at COVID as being like a sort of a disaster or something which has had a very lot of negative impact. But if you look at it, COVID has also been a big boost to the technology space, because it has acted as a catalyst to really kind of change behavior of people, right? Fear is a big driver for people, we know that. So the entire user behavior has kind of changed in a way that it has made technology more acceptable to the people. Just because there was no other alternative, people adopted it, right? So I think I see these really three big trends which are coming together in the last few years, right? Which is having a significant positive impact to really push technology to where it can deliver value, right? And we are seeing the impact of this even in the wealth management space, right? It's very easy for clients to invest in global sitting in India. It was unimaginable a few years ago, right? When I started this firm, this was really my friend's idea. I had no idea. I had never done a global investment myself, right? I didn't even know that it was possible. It was, and at that time when we started, everything was so paper-based, right? Like the first investment I did out of India, it was so painful, you won't imagine, right? It took me literally 4 days to send money out of India. I had to go to Citibank branch. The first day he sent me back saying he doesn't even know what it is, right? And then only they allowed me to do it. I had to fill up like 20-page forms and give all kinds of declaration then. But today, the way the direction is going, you can get access to global investments in a matter of few minutes, or maybe a maximum, let's say a couple of hours, right? So that is where the industry is moving towards. Obviously, people getting more aware has helped. Global markets doing far better than Indian markets just after post-COVID has also, and recovery much faster has also helped. So in net, I would like to kind of conclude that technology has been a big driver in enabling global investments, what we are seeing today. And I think that entire momentum will only build going forward. That's my sense, 2 cents here.
Thank you, Vinitji. It is really acceptable now that technology has really been a catalyst and the driver for bringing the digital transformation in the society, as far as making the financial inclusion is concerned, at all the spectrum of the society. I would now request Dr. Bhaskar's comment on that.
So thank you very much for inviting, and may I just compliment the great student body, very well managed, and I was quite impressed. So thank you very much to the student body and the representatives, and Dr. Rani, thank you very much, and the fellow panelists for inviting me here. I think my colleague Vineet has given a very good overview, so let me just try not to repeat, and I'm sure others will also give their unique perspective. So I'll be talking about it from the perspective of maybe an international view on what we see sitting outside India, also regulations, and some bits around technology and some of the new operating models that we are starting to see globally. So the first thing that I would say is that I would agree with Vineet. One of the real changes for Indian financial services, for example, was the entire structure around RuPay and UPI. That is perhaps one of the most spectacular industrial and financial industry infrastructure projects that have been launched. And that has literally launched 1,000 ships. That exactly has democratized finance to an extent that it's very difficult to imagine in quite a lot of other countries. So that's the first thing that I would say. The second thing, as a secular trend that I have seen, is people actually starting to invest much more, much more. Before it was sort of, you are very happy to just go for sticking your money into your savings account or your GPF, and that's it. You want to go more, real estate it was. But now that retail side of investing has moved forward substantially. The third secular trend that we are seeing is the acceptability of credit for individuals. I mean, I'm an old git. My wife would absolutely refuse to let me take on loans for anything. You can argue whether that's good, bad, or ugly. But now my two cost centers, they are very happy to take up loans or take credits. So things like that are starting to give rise to what I would call as models such as buy now, pay later, so on and so forth. And the final thing I have to admit, and this is something that we are observing globally, is that the risk-taking ability of especially the younger generation of corporates has substantially increased. I was speaking to an Indonesian firm, and they were talking about how in Indonesia, which is roughly parallel to the Indian economy as well, the retail equity market is generally popularized by people who are 30 to 60 years of age. The virtual asset market, which is about 18 to 20 times the size of the retail equity market, is popularized by 18 to 25-year-olds. I was speaking with my youngest daughter, she's 18, and in London, most of the kids are now talking about which tokens to invest in and where to go, etc., etc. So what I'm trying to get to is on the retail side, there is a substantial amount of secular changes that are happening. Let's talk about on the corporate side. The corporate side as well, as you would have seen, there is a substantial shift away from people starting to become quite smart in terms of the instruments that they're taking, understanding new areas that are coming up, for example, carbon credits. India is going to need a substantial amount of investment to achieve its net zero goals. So carbon credits, the models are getting different, and it is an asset in its own right. The recent regulatory aspects around crypto are an interesting step, and those will be different. The taxation, the rise of Gift City and the international financial services piece, the LRS scheme, the secular movement that we are seeing, people moving away from trusts as a way of wealth management to foundations, etc., is substantially different. So if I look forward, the basics of financial markets are going to pretty much remain the same. Lending, credit, all those things are going to be there. Insurance, even though sort of, we're talking about IPOs and those things coming up. So broadly, they are going to remain the same as they have been for over the last several decades and centuries. But the virtual asset side is going to increase. Metaverses are going to come up. Identity is going to make a huge difference. Shifting between different metaverses is going to be very, very important. NFTs are going to come up very strongly. I met up with a gentleman who did the first NFT for a Malayalam film. Fundraising from other digital assets and international markets is most probably going to increase. And of course, the government's proactive stance to make life better and easier for firms to do business will give a boost to the financial services sector as well. So all in all, I'm quite positive. I'm quite positive that all the things are coming together. Inflation is a worry, but then we are talking about India. It never really quite went away. And my personal view is it's going to come back. So people have to be worried about that. But that itself is going to drive again, another secular trend to get more and higher yield. So all in all, very positive. And I think especially for the students, you don't have to do the traditional thing of joining other firms. The amount of money that is going into venture capital as well as startups is extraordinary. So for students to consider setting up their own firm, it's a great time to be in. I'll shut up. There we go. I talked too much. Back to you, Dr. Rani.
Thank you, Dr. Bhaskar. Now I'll invite Mr. Sanjay for his comments on the previous two experts. They mentioned the role of the technology, and I would like to comment on what role technology can play coupled with the traditional financial instruments. Due to the uncertainties looming around the businesses, such as in China, how does India stand vis-a-vis other Asian emerging markets like Vietnam, Bangladesh, and so on? Mr. Sanjay.
Thank you, Dr. Neela. It's indeed a pleasure to address the young students and future citizens of the world. My view would be more global, given that I've been working out of Singapore and London for the last 20 plus years. So there are a couple of aspects which I want to highlight. First is that in terms of how the technology is impacting the day-to-day working sector out there. And in that, of course, as we mentioned, there is a huge amount of technology adoption. Adoption rate has gone up significantly. Right? Now, from the capital market point of view, what this technology has done is two very distinct features. One is basically, broadly, I could call it fractionalization. I remember way back in late 80s, early 90s, when I started my career, we used to do an open crash system in India, and the trading lot used to be 100 shares, right? So then became 10, and then of course it's nothing today, aspectively speaking. So what has happened is that amount of trades have skyrocketed. So an amount of trades we have today is almost 100,000 to 1 million times more than what used to be in 1980s and 90s, which has made two more interesting outputs of it. One is democratization of ownership, right? Today you can afford to, for example, own one share of Reliance Industries or one share of ITC or what it might be. And number two, it has given to a new fields of investment and profession altogether, right? We have algo tradings, we have people who do big data analytics, people those are looking at trend analysis, people doing macro overlays in terms of hedges, in terms of the various swaps, indices, ETFs, and so on and so forth, right? This whole industry has just woken up. The other very important thing I want to highlight, which is of course being indirectly referred by both Vineet and Bhaskar, is in terms of blockchain. Right? That what we are seeing today as blockchain is only tip of the iceberg. Right? And just to take the hype and take you the future or across out there, blockchain is nothing new per se. We have always had a blockchain, but because of technology, we can have an end-to-end blockchain. Now understand this implication very well, because this is going to transform the world. Or as McKinsey told, in about 14 to 17 years, 65% of all banks in the world would not have a business model. So it's very significant. Understand what it means. And I would refer back to, I think it was 2000 when I made a paper on e-finance in United Nations, right? And at the time, what I told is what is now coming true, which is that traditionally, for you to have access to credit, you require asset. Traditionally, for you to acquire credit, you require asset. Today, you can acquire credit if you have a skill, if you're performing. I'll give a simple example to explain this to you, because this is going to transform the world. And I take a simple example. Think of an auto company. So I take a simplest industry. I'm sure all of us understand how industries work. Think of an ancillary to auto company. Let's talk about, just put a name on the table, Tata Motors. The ancillary wants to produce a part for Tata Motors, but doesn't have capital, so it can't take credit. Because it can't take credit, it can't grow, and it's constrained. Bring in blockchain. We know the final product will be taken by Tata Motors. We know the raw material person who's going to give. Let's simplify again. This Tata Steel is giving the raw material. And we know the margins we're talking about. Why do the ancillary unit require to have any assets? I have an order, I have a confirmed order both the ways. We could put a blockchain and make sure there's practically no leakage, and we can create huge amount of credit, therefore growth in the industry. Right. I've oversimplified. Yeah, go ahead. But we have a point.
No, please, sir.
So the point is this. This opens huge amount of things which can be done. Bhaskar did refer to NFTs, one portion of it. He talked Malayalam movie, one portion of it, right? We have seen huge amount of those development happening in other fields. For example, in terms of owning rare art pieces, paintings, etc. They're fantastic, all good. Because it's a different field altogether. But I'll give you more interesting things. Last year, in 2021, China issued about $170 billion of bonds only on blockchains. That's the future. So once the blockchain comes into picture, they become much more efficient. And therefore, almost 60 to 80% of job in terms of trading, specifically in the middle office settlement trades sector, this will get lost. So that is something which we have to be aware of in terms of what's going to happen tomorrow. So what has happened in China is just the tip of the iceberg. I'm sure most of you would have read the Ray Dalio book in terms of changing of the world order, and which very succinctly explains how the world order changes. And we know we are in the transition where the China would take over US in terms of the global power, so the leader. Right? China is already bigger than US in most of the terms it matters. Again, a simple example to you. US, we're still talking about 5G. China launched 13 6G satellites on 20th of October 2020. In terms of AI patents, US global share 24%, China global share 37%. Look into artificial intelligence, data mining, genetics, EVs, solar panels. Where is US? 5 to 7 years behind, right? So the reason why I'm highlighting this to you is that it's not to say that China is the best in the world, but to explain to you where the trends are happening sector there. And what China is very important. Remember that in 2020, we have 25.5 billion digital transactions in India, with 15.5 billion transactions in China, with 1.2 billion transactions in the United States of America. And that was the time when the Alipay of Alibaba and the WeChat of Tencent didn't talk to each other. So last year, since China is talking about regulating by what you do, not what you say, they combined both the platforms. And therefore, the amount of trades they do, they can have your Visa and MasterCards for breakfast in the morning without burping. We're talking something like 51 times more trades. Right? This is the future. So the point is that, this is what's happening across the world. Remember that China is one of the world leaders in terms of digital currency. Right? India is talking about digital currency in April. Absolutely delighted to see that. Right? And China has not only been working with digital currency for more than a year. In the Olympics, 100% currency being used is only digital yuan, including the foreigners. That's the future. Right? So in the key trends, these are things which we need to be keeping in cognizance. And in terms of the investment which we need to refer to briefly, we already see huge amount of investment from Indians going ex-India. To give a color to you, I don't remember the exact number, but I remember 2008, 2010, it was a couple of $1 billion. In 2014, it was $4 billion. Last year, just to give you a color, it was $18.75 billion only under LRS scheme. LRS scheme, just to remind you, is for individuals, and we are not talking corporates here. Right? So these are the numbers we're talking about. And this only grow further. Why? Because in terms of the interest rate, if you look in terms of interest rate in India, after hedging rupees or vice versa, in US dollar, after doing a hedge of dollars, you're getting a higher interest rate in United States of American dollars than in Indian rupees. And by definition, it means more of Indians would be investing ex-India. And before I end, I just want to take a small, very important box. The humanity has not seen a single pandemic where we didn't see change of a social order. I keep my finger crossed for this pandemic. I can only point out one thing to you, that what you're talking about in ESG is just the beginning. As we all say in India, bhuke pet bhajan na hoy gopala. Now when you bhuke ya bhajan, your stomachs are full, we all become more moral. And the world will change in terms of making sure that we do the right thing. And just to give a color to you, we are talking about the green bond, the ESG bond, as we call it, ESG bond to be almost $1.5 trillion in 2022. And mind you, this is only about 11% of global bond issuances, which is, just to remind you, last year it was 4%. From 4% to 11%, yet $1.57 trillion only. So future is lots of opportunities there for young students from the institute. With that, I'll hand over to Neelam to guide the panel further.
Thank you, Mr. Sanjay. Mr. Vineet, you mentioned that we have a very few cases of blockchain. And I also used to wonder what is not letting blockchain leverage its capabilities. Is this the love for the centralized systems, centralized organizational structure, which is holding it back, or what are the other reasons? Your comment, Mr. Vineet, please.
I think the first and foremost is the availability of talent, right? So it's a relatively nascent technology, right? We started off a prototype of blockchain for a particular use case that we had beginning of last year. We tried internally to do something for close to 3 months. We didn't go anywhere, frankly. Then we got a person from outside, right? And that person has been working he's an expert in, he's based out of Singapore, and he has kind of built similar systems before, all right? It took him almost 8 months to deliver us a basic POC use case. And then now it is taking us 3 more months to even just productionize it, right? So it's a lack of talent, right? And understanding, I think that's the first part of this. I think as more and more people start learning about it, implementing, going through real life scenarios, right? That is when you will get the actual hands-on experience, right? Along with that, obviously, expectation from business now is that blockchain will solve all their problems, right? Because understanding of where the value is will only come once some of these implementations go live, and that will take its own time, right? So you will see failures happen, you will see learnings come out of it. Then only businesses will have a realistic expectation, right? So if you go back and look at like this typical Gartner hype cycle, right? So we are somewhere in the early stages there, and we'll have to let the entire industry go through its complete cycle, and then you will start some of these kind of maturing, right? So I think that's what I would say. Two things. One is there is very few people who know what to do, how to do this, right, to bring it to life. The second is understanding of business is also very, very nascent. So I think they will have to go through that entire learning curve. Only once both are there, I think we'll see a lot more realistic use cases come in. Now, everybody talks about blockchain, but really implementations are very few, right? I'm sure a lot of people are POCing it, but once proof of concepts, but really they are not able to bring anything to life because they are not able to see value in it once the implementation is done. So it's a matter of time is what I believe. More technologists and business folks working on it.
I'll request Mr. Raj for commenting on how blockchain and AI is going to change the digital wave of the financial markets, especially in lending sector.
First of all, thanks a lot for inviting me. I do feel a little bit of a dinosaur here, with so much young blood around me, but it's a great opportunity to learn from your panelists, such, bright bunch of, I would sort of, hesitate to say colleagues, but yes, it's a great learning experience to be with Vineet and Bhaskar and Sanjay and also all the young people around us. So thanks a lot for the opportunity for this learning. With respect to your question, madam, my thing is that technology. I'm a little bit old-fashioned. I always look for a user case. Technology, for me, or for my industry, I would say, for which is personal finance and banking, is not an end in itself. It's actually a means to an end. And I think that a lot of people have, in our setup, in the ecosystem around banking and financial services and NBFCs and so on and so forth, have come to grief when they got so involved in creating technology for the sake of creating technology. How nice does it look? And luckily for them, and unluckily for the investors, it was a whole lot of, actually tens of millions of dollars went, chasing great technology and well-intentioned. But like I say, it's always better to just step back a little bit and say, what am I going to use this for? Before you develop technology. if I talk about my field, which is a little different from all our other from Bhaskar and from Vineet and for Sanjay, it's around very specific personal finances about retail banking. It's so chota stuff, all like cups of tea, if you like, at the dhaba, 5 rupees a pop types. So that's my expertise. In that, I would say, fintech has become a daily word, and all our students also keep using fintech all the time, saying fintech this and fintech that. There's no omnibus which describes this. Fintech is a word which means different things to different people. Largely, my view is that in our field of personal finance, fintech, like Bhaskar was mentioning, with respect to the payments and how quickly that has changed, is the payment side where you're speeding money along. That's how you use technology. My pet thing about how do you use it. So this is the user case, how you speed money along. The other thing is, for what Vineet, does as in retail investments, and people are buying mutual funds and so on and so forth. In which case, or for that matter, insurance or health insurance, where technology is used to sell a product where you're taking money from the customer and giving him a life insurance or giving him a mutual fund. That's also cool. Then we come to third one, which is again, close to where we work, is instead of taking money and giving him life insurance, you're actually giving him a loan. Which means there's a credit decisioning involved. Now these all three are called fintech. They're all andes aa rahe hain. But there's an omelette and there's a fried egg and then there's a scrambled. They're all different things, and many times we find that in the application of the technology thereof, there's a bit of a cut, copy, paste. What works in North America or in or where Sanjay is working or where Bhaskar is working in Singapore or in the UK. What works there doesn't necessarily work here, although they are very good because our landscape is different completely. And I can just sort of belabor the issue with respect to landscape and give an example of, maybe a small ticket home loan where someone has taken a 30 lakh loan to, and purchased and probably a property worth maybe 40 lakhs. If for any, genuine reason as well, if there's there's a default on the loan and and the bank or the lender is trying to repossess the property and then hopefully sell it on the market to recover his dues, I leave it to your imagination where that road is leading. Okay, so that ecosystem is different. Therefore, when you're using technology to lend, to give money as opposed to take money or to speed money along, that's the other thing, it's a different, whole new world. I mean, our favorite phrase of Mars and Venus comes into play. Fintech for lending is very different from fintech for giving money away or for speeding money along. And therein lies the difference. And success will meet, if you say going forward, will be those who recognize the differences, and whenever they're developing technology, they've got a user case in mind. Without that, it's to my mind, it's really great for pure research, but I'm all for applied research when you're trying to find a solution to something. That's where it would make a difference, to anyone. The other thing is there are when you talk about technology, what will happen in the future, there are decades when nothing happens. And then there are weeks when decades happen. And sometimes it's not even planned. No one even plans for these things. They happen because of extraneous circumstances, like some of our panelists were referring to COVID a couple of times, and how quickly that has brought about some speed in technology absorption. Well, let's put it this way. It's not so much absorption from the side of, again, through my ecosystem in terms of credit cards and personal loans and so on. It was more important for the lenders or for the providers of credit to absorb technology as opposed to the borrowers. Someone who's taking money, he'll absorb, he'll learn anything. He'll learn technology also to get some money, right? Okay. So it's a question of who's disbursing the funds. That institution has to absorb technology. And I'll give you another example. If I go back, to the home loan, when you're giving a loan, you need to do, of course, you need to do title verification. You also need to do a valuation by going to his house and checking out, how much it is likely to be, because there's a loan to value ratio, whenever a disbursal is made. Can you imagine in COVID times trying to convince an architect to go into somebody else's house to inspect the premises and then submit a valuation, right? You all know, where that is going. So can you imagine how they would do this? How you would somewhat force yourself to think that I could go in and do a valuation without actually going there physically? It seems to be a contradiction in terms, right? But they did it. They used technology for that. How would you get somebody to apply for a credit card without signing on the app? How would that happen? Would you take a pay slip or not? How would you verify that? Farzi to nahi, this is India, like we said, right? So all these systems came into place because of this black swan event. COVID came, and people who was going along slowly, in this case, some of the credit providers, okay, we'll absorb technology as it comes and we'll see, where that goes. Suddenly we're forced to adopt it. And therefore, I think, Neela Madam talked about financial inclusion. I think this has been the largest in my world. There's India and Bharat. Bharat started absorbing technology because there was no way out. If they had to invest in shares, or if they needed a personal loan of, say 50,000 rupees, the users, the end user, the technology went to the farthest corner. The Kirana shop in the village can speed payments along, or can actually sell you a health insurance. And that's how financial inclusion happens. I'm actually, Madam, on your wavelength, when you say that yesterday they said 90% of the wealth is with 10% of the people, I think it could well be maybe, 397 or something like that. So, like I said earlier, I'm a little bit old-fashioned and somewhat, I have a socialist, side. There has to be a safety net. Our population, it's a poor country. We can't let people, go away. So financial inclusion means different thing again to different people, but we need to provide and look after the health and services as we go along. So, and, I can't let go, of the mic, of the virtual mic, if you like, without, going back to what Vineet said in terms of how do you open an account, how quickly you open an account. I started my company with 1,000 rupees of paid up capital way back in 1989. And that time, the only way to open an account was to stand in line and deposit, 10 notes, stand in line and put it in the bank account. There's no other way of opening an account. And you need to produce somebody who knew you, who to sign on the dotted line. Yeah, I know this guy, going to run. I was only going to put some money in it. I wasn't taking it. No. So that was the system then. And the system has changed a lot. And exactly what, coming back briefly to what Bhaskar said in terms of, attitudes towards loans or attitudes towards credit. Completely agree with Bhaskar when he says that, it becomes difficult sometimes, of the older generation to even think. There was a stigma attached to borrowing. They would, if, my father, if someone told him take a loan to build a home, he'd probably have a, cardiac arrest. God bless his soul, he's, somewhere else at the moment. But the way of doing of getting a home at that point was to apply for a loan against the Provident Fund and then get a small piece of land and build 4 walls around it and maybe a room, and then wait for retirement to happen so you can build 3 more rooms. Now there's no question of that. The minute you got a job, you think you're confident about the future, the first thing you want to do is to take a loan and buy a 2-bedroom, 3-bedroom, whatever is your requirement, to take a loan and buy a home. And get on with your life, as opposed to, "Main retire hoonga to fir dekhunga." Life. This is the way people look at loans, or earlier maybe, if you looked at some of our Bollywood movies, the youngsters won't remember, we had a villain called Pran. If you look to Pran or, or Jeevan, that money lender, in the village who would confiscate all the jewelry and then give some money, to the, in the older movies. That time, borrowing was like taking a loan was a big problem, man. People used to talk to each other, oh, that guy's uswo to karze mein hai. Today is the exact reverse. If you're not learned how to leverage credit judiciously, you're losing out. So that is how people's thought processes have changed, over the decades, as I said, and now, of course, looking ahead, how people are going to access credit is going to be very different from what, so one of our panelists mentioned, buy now, pay later. If I can go just half a step ahead, if you look at credit assessment, until 1 year ago, there was no BNPL. There was no buy now, pay later. You had to have a credit score. You have some person, whether it's an NBFC or for that matter, a bank, had to assess your credit worthiness, for you to access any credit. Today, I see some very bright people, on the panel, patiently listening to us talk and talk and talk. But all of you if you didn't have a credit score, you didn't have a history to boast of, there are institutions who will help you get started. They'll give you 5,000 rupees or 1,000 rupees and then keep rolling that over, increasing that amount. That helps you build credit history, it helps you build credit score, and you can then access bigger ticket credit, maintain a good credit history therein, and go for and keep on going from there. This wasn't there. You had to produce, like I said, I had to produce a warm body who said he knew me before I could open an account. Similar, if you didn't have a credit score, you're not going to get a home loan, or you're not going to get a personal loan or a credit card. Today you can get it, maybe with a very small limit. Maybe someone will give you, if I can take a couple of names, Unnati and Akriti and Komal, so people will give you a credit card with maybe 10,000 rupee limit and watch your performance on it. Because they're looking at it differently. Even their thinking has changed. They are looking at it not as only as extending credit. He is looking at customer acquisition and to be part of your life. How your life will develop, what your future needs you will have. So even the lending institutions or banks are looking at it differently. So artificial intelligence, machine learning, all of this is a swiftly changing landscape. Expect greater and ever-evolving innovation. All I can, tell our, young friends is look out and always stay half a step ahead of any change that's coming. Not more than that. Don't get ahead of yourself. All of the thought I'm going to leave with you is don't think that, I'm going to be so bright that I'm like light years ahead. Is no use. It's an idea that was way ahead of its time. Half a step ahead of the times is a good idea. Thanks.
Very well taken, sir, your point. And your experience has really triggered me to say a few lines. Don't consider that I'm deviating. My students, please don't consider I'm deviating. But I'm reminded of my 2 lines. एहसास ही काफी है कुछ नया कर गुजरने के लिए, कुछ बेहतर करने के लिए. एहसास ही काफी है कुछ बेहतर करने के लिए, शुरुआत ही काफी है कुछ नया कर गुजरने के लिए. So, sir, how do you see? Thank you, sir. So, how do you see the role of the neo-banking in this scenario, especially a financial inclusion aspect?
You hit the nail on the head. The quick answer, I see an ever-expanding role. And in financial inclusion, nothing will move faster than this. Otherwise, it will just be so much, words and, people like us talking, boring everyone else. But this digital banking and the way this will develop in terms of whether investing, small ticket or opening accounts or access to credit, what Sanjay had earlier mentioned, how we can, access personal finance access to credit. Those who, he did say that either you had an asset and then you could access credit, otherwise you couldn't. That's what Sanjay's point, absolutely right. Today, we are looking ahead. So you can have absolutely no assets and start on a credit journey. And digital banking, madam, will enable that to happen. And in fact, some of our students and anyone else or the youngsters looking on can start on their credit journeys. And always one, like at my age, I love giving free advice, especially unasked for advice. Never spoil your credit score. It's going to, it will hold you, it will hold you back in some way. So don't borrow unless you're getting stuck. So, but apart from that, yes, digital banking will help you access credit and will help you go along. And this will evolve in terms of new products, just like BNPL. It wasn't there 6 months ago, 8 months ago, not in India. It's there now, and it will keep developing. It will evolve because even the guys who are extending new products, are experimenting. They even don't know the answer. They're going to learn from their mistakes as well. As long as you're clear about what you're doing, let them, everyone else, make their mistakes and work that way. With respect to financial inclusion, ma'am, that's the second part of your question. I think I alluded to it earlier, when I was speaking. It is really changing Bharat. India, the metropolitan cities, in fact, tier 1, even tier 2 cities, are pretty much financially included if you get the drift of what I'm saying. It's the rural population which will become more aware, which will become part of the financial ecosystem. They will start investing, they will start borrowing as a result of this technology going to the, like they say in our language, dur darast area mein pahunch ke, it will harkat mein aa jayega, as it were. But I think not only is it about financial inclusion, ma'am, it's also about how he will, in a broader sense, start making friends with technology. He will start accessing information. His thought processes will change. The way he votes will change, if I can digress a little bit. Politics will change because he started thinking through technology. In fact, a full marks to some of our banks and also our NBFCs who have aggressively over this, COVID period, have introduced the phygital side, because if you go to an older person, and I'm really old, I don't even want to tell you my age, but if you go to older folks and say, hey, why don't you put in an online application for A, B, and C? He'll get intimidated. So what happens is that the banks have now said, okay, you want to apply online? Come on. Now, if you don't want to complete the process online, I'm going to have someone call you who will talk you through the process and help you complete the transaction. So, different folks are different folks. Not everyone's, equally smart or not equally privileged to have had, to be tech friendly and so on. Even for those who are not tech friendly, there's the phygital side. It's not only purely digital. There's a mix of it and what we call beyond digital, if you like. So I think financial inclusion through technology will play, will come into its own. And the phygital side, is the most important. Because if you go with a high-tech solution or a product, to a somewhat technology challenged person, you don't want to include him, he'll run away. You need to help him get along. Baat karke samjhao to sahi na thoda usse bhi saath saath mein, hai na? So that's the phygital model, and that is what will. And then next time around, he won't need the assistance, right? So you included him, and that here is the herein lies the rub, the pleasant rub, if you like, where I think technology, digital banking, and these products, will go a long way in lifting the social indicators of our country in terms of education and health and so on, not only finances. Paise to sabko apne apne pyare hain. Okay, thanks.
Dr. Bhaskar.
It was a long answer to a pretty short question, but like Bhaskar, I guess I also keep talking and talk too much.
We are looking forward to your insights, and I hope my students are all enjoying and they will learn from it. And I also endorse half step, because one of my scholars is really very aspirant for blockchain technology, and he feels like tomorrow it should happen everywhere. And I have to convince and spend a lot of energy in that half step. So, Dr. Bhaskar, your comment on how the differences between our society and other societies, they will pose a challenge to this adoption of technology and the digital formation. And how do you think that what these young generations they can do?
That's a very philosophical question, and I'm going to try and avoid the temptation to witter on. So my sincere apologies to my other colleagues on the panel. One of the things, and Raj, I don't think you are old. I am old. I mean, I've worked on punched cards at Hukumchand Mills in Indore. So that just tells you what an old git I am. But there we go. You see, I grew up, and as Raj, I have that little remnants of socialism inside me as well. And I grew up in a centrally controlled and planned economy. So, you know, State Bank of Indore में खड़े हुए हैं, वो टोकन लेके जब तक कि वो लेजर में भरेगा, then वो मैनेजर के पास में जाएगा, and then you get the 50 rupees.
समोसा भी खाएगा उससे पहले.
अब याद मत दिलाए, please. I'm trying to diet. So what used to happen was that credit and economic activity was centrally designed, developed, and sort of, you know, deployed. And the entire infrastructure was built like that. And then obviously you had the liberalization where, as they say, the dead hand of the state was slightly removed. But to a very large extent, we still have that mechanism where you do have central infrastructural nodes which control the economic activity. So either you're talking about a regulator or a bank or an insurance company or a stock exchange, where people will aggregate together and somebody who's supposed to be very smart and intelligent will then deploy it according to a set of models or rules or regulations or what have you. All very fine and good. But what's the thing that we are seeing, especially sitting here in Abu Dhabi, which is now one of the largest regulated virtual asset jurisdictions in the world, the thing around distributed finance, et cetera, is coming up. And I hear all my panelists saying, you know, where's the use case? I have a rather different perspective and something that I see as it's going to take on a life of its own. NFTs ki baat kar rahe the. At this moment, as of last year, the amount of the NFT market was 2 times the size of the traditional art market. So as a regulator, when I see these changes where, for example, the vast majority of investments that are happening in terms of the number of people or where it's coming from, 18 to 25-year-olds who are getting influenced by TikTok or Instagram, how is that centralized model going to work? DeFi is coming up. All I'm saying is that, yes, there are use cases being developed and encouraged and checked out, and there is always going to be a role for a centralized authority of some kind. But this technology itself that we're talking about in terms of DeFi, in terms of blockchain, in terms of tokens, this is going to change. Look, an equity share is a token in itself. That's it. It is a token. And equity has been existing with us for centuries. But what I'm trying to say is that the democratization of finance is going to happen much more and faster. People are still trying to control it by rules, by regulations, by taxation, by having centralized entities. But when you're looking at, you know, I mean, as I said, I spoke with my kids, and this is nothing new, whether you're talking about school kids sitting in Indonesia or Hong Kong or Singapore or London or wherever the case might be, they are looking for yield and they have got high appetite for risk. So they don't actually need a centralized unit to actually control their behavior or regulate it or modify it. So it could literally be, for example, peer-to-peer. Raj was talking about BNPL. Without a credit history, you are extended credit. The other thing that we have to note is that, at least in my generation, people used to think about, bhai, mere ko to naukri karni hai, ek ya do company mein kaam karunga. I'll have a ready-made source of income and fairly consistent source of income coming forward. These days they don't. My cost centers don't. Most of the people don't. They are very willing to open up and start up their own companies. And that is a secular trend that I love. And it's also getting a huge boost because Vineet was talking about family income and family wealth management. A substantial portion of the families that I'm seeing, including quite a lot of Indian families, are setting up their own venture capital fund. So the provision of private capital is also something that is substantially changing, and people are starting to take bets. You may turn around that it might turn, a regulator or somebody who's controlling this, their hair gray, mine. But from the other perspective, I'm very optimistic that out of all these experiments and distributed DeFi mechanisms or democratized mechanisms, something new, something interesting is going to happen. Flip it around. How much has the centralized way of finance or economics, have they really provided that kind of growth that we traditionally have seen in the 75 years of India's existence? No, it's like Moses telling the Pharaoh, let my people go. Back to you.
So now I'll come to Mr. Sanjay. How do you see the corporates in general and your company in particular will be committed to provide accredited and institutional investors with a focused and specialized range of investment solutions driven by digital technologies? Do you think personalized portfolio advisory with the human and AI-driven approach plays role in your investment journey? Mr. Sanjay.
Thanks, Dr. Neelam. Let me begin with a small caveat that, our customers are primarily institutions and distributors and not as much direct clients. Having said that, there are two very important things which has come in the discussion. I want to highlight those and then come back to across of that. Number one is the attitude to leverage, so taking loan. Now, this is very, very important because it was in 2010 that the International Behavioral Finance accepted leverage provides you a superior risk-adjusted return. And I'm very happy, thanks to Mr. Ray Dalio, who has made it a very big story around it by calling it risk parity. And that's something which is critically important for people to understand because in the traditional finance, we have an efficient work frontier. We all, I'm sure you all understand it. And therefore, there can't be an arbitrage. Right? Now, behavioral finance tells us, no, there is an arbitrage because human being has certain, basically, what's it like cognitive flaws. Right? And one of the flaws which we have is where we are always apprehensive of the future. Right? You may be sitting in your room, in your bedroom, and the light goes out, you feel uncomfortable. Even in your house, what are you afraid of? But for a few seconds, you will feel uncomfortable. Right? There's certain human cognizance biases, and therefore one of the bias is in terms of taking leverage. Right? I leave it to Dr. Neelam to explain you what details in terms of how it works. But moving on to what Raj mentioned across of that, the key thing is that if we know there is quote unquote, and with a very strong quotes unquote, a sure shot way to make money, and as I was told, being within limits, of course, then something which we should look and learn and work from it. Right? That brings to the question which Dr. Neelam asked me. So what is happening is that the fact that the leverage was being used by sovereign funds and large pension funds is now something which is available to everybody on the lane. Both from, of course, people like Vineet, who have fantastic platform and they can be leveraged a sector out there. And also from my fund point of view, because our core value proposition is that we are investing into bonds and we take leverage. And therefore, we are able to give something like 6 to 8% per annum in dollar terms, and that's been doing for the last 10 years. So this is what we have brought to the people at the retail level. So when we have tied with various banks sector out there, and the banks distribute the products to retail, yes, to that extent, quote unquote, we have customized those things to a retail investor who does not understand leverage very well, who does not know how to control leverage very well, who doesn't have the various parameters in terms of attributes in terms of managing the portfolio. So our core product indeed is in terms of democratization of philosophy, which has been used successfully with a lot of largest investors in the world, bringing back to at the level where individuals can benefit from it. Yeah. Second thing is, of course, we talk about blockchain, and McKinsey has a beautiful section on blockchain. There are hundreds and thousands of used studies. And coming from Singapore, I can talk about one thing which I'm very proud of, which is when a ship moves from one port to another port. Previously, there was about 217 or 8 something, 200 plus documents which were exchanged. Thanks to quasi blockchain, it's not complete blockchain as it. Today we require only 17 documents. So when we're talking use cases, there are the hundreds and thousands such cases available on the McKinsey website. I encourage you to look across on that. Coming back to what Dr. Neelam asked me in terms of the individual thing, the answer is yes. So when we participate in a blockchain issuance by financial institutions, package it into a fund format, then you as retail investors can take benefit of it. So that's a beautiful way wherein these products which are now quote unquote exclusive to the big boys is now being enabled for even small people to participate. And I'm given to understand even in India now retail people can even buy Government of India securities, right? And there's a lot of participation happening. And of course, there are a lot of startups in India which are now trying to democratize in terms of participation of fixed income by retail. The reason why I highlight fixed income at times, people worry is that, look, yes, I am biased. I am from fixed income world, and no denial that. But also to highlight to you, remember, the fixed income market is between 10 to 100 times bigger than the equity markets. And everybody today is an investor in fixed income. Even when you keep money in your bank, you are a fixed income investor because you're earning interest. Now, as an intelligent, as a qualified person, as a professional, as an MBA, can you increase your income? Rather than earning the interest, bigger interest given to the banks, can you increase it? Instead of putting money into HDFC, ICICI, or whatever bank you talk about, can you buy the bonds of those particular banks and get a higher return? So two takeaways to you, which were so one is that you can participate in terms of certain assets, certain strategies by participating in various funds, leverage strategy, long short strategy, hedge strategy, reverse ETF strategies, passive ETF strategies, river correlations, what do you like to learn? And B, you can participate by, of course, using the various AIs and robo-advisors sector out there. Right? Like I know Raj would know even better than me, the way the Amazon is doing experiment in US in terms of giving almost 25% cashback. So they give 5 to 25% cashback, which is obscene by any standards in the world. But by doing that, they're getting a huge amount of rich data, which they're now going to use in terms of getting into financial services, right? Again, to put to the what Dr. Neelam mentioned in terms of making sure they give you customized service. And they will customize to an extent where you will be ready to pay a tiny premium because they're customizing it for benefit. So that is the two different key aspects which I see across in the investment world.
Thank you, Mr. Sanjay. Now I would request Mr. Vinny to comment on what type of future trends, especially the investment trends, do you foresee, given the flair for the investment, sustainable and the impact investing?
I think I'll just reiterate what Sanjay in his conversation mentioned, right? Which is the biggest trend, especially technology will enable, is around fractionalizing investments. I think that's the biggest trend that we are seeing. where all kinds of investments are now being made available to all kinds of investors, right? So over the last 1 month or so, that is an area where I have started exploring a bit, and I'm kind of surprised by so many let's call it as fintechs and even more bigger institutions now making available access to the kind of financial products that I could not even imagine. So I came across a bond platform where individuals can invest in corporate bonds at 10,000 rupee sizes. This is in India, right? Similarly, there is another platform which is making available ability for individual investors to put in 10,000 rupees into pre-IPO opportunities, right? So those were all the domains of big boys, big banks, right, in the past. And it is happening right in front of us, right? So fractionalization of all these kinds of investments. Real estate, we know it's already old, it's 2-3 years old, right? But all these opportunities are now coming right in front of us, and it's already a reality. All right. So I think that's the biggest trend that I would see. It's now in that 10,000 rupee sizes. Someday, very soon, it will come down further and further, right? Someday it will become available at 100 rupee sizes, and maybe, who knows, someday at 1 rupee sizes, right? So that's the piece which is the main trend which I would see.
Thank you, Mr. Vinny.
Dr. Neelam, can I add a small point?
Yes, please.
In Singapore, we have, I would say, you could have ATM cards, ATM machines in India. We have easy machines, we call it in Singapore, where I can buy a government of Singapore bond for $100. As a retail person, I can go there, put my credit card, and buy $100, and it comes to my CDP account.
Yeah,
Yes.
excellent. Yeah.
Look, I mean, this change I'm observing in quite a lot of countries as well. Let me put it another way, just to show what a fundamental shift is happening. People are actually moving their salary accounts to their brokerage accounts. The concept of a salary account going into your current account is slowly starting to reduce, simply because of the increase in availability of such products that you're talking about. And they say, क्यों पैसा वहां पर रखना है, फिर सेविंग्स में डालना है, कहीं इन्वेस्टमेंट में डालना है, कहीं ब्रोकरेज में डालना, सीधे पहले ब्रोकरेज में डालो और वहां से फिर निकालो. In fact, for payment of rent and other things, it's paid out of their investments rather than the savings. So both, I suspect, Raj and my parents are going to be rolling their at such a high velocity that the energy crisis can be resolved by that. But there we go.
Dr. Bhaskar, as blockchain promises to use the financial intermediaries through P2P models and DeFi. So what do you see specific risks and challenges involved in the evolvement of DeFi? And what are those?
Look, at the end of the day, a bank can be considered as a giant ledger. It is a giant ledger. You get in money and you take it out. Of course, we can go into the fractional banking, etc., that is there. But the blockchain itself is technology, right? And I'm not that fussed about blockchain in itself. The question that comes up is, what do you do with it? So it and the use cases that we are starting to see is, we were talking about fixed income. So security settlements can literally be done within 1 day rather than the 3 days that it would normally take. If you wanted to establish, for example, custodian rights, right now, if you wanted to do any kind of proper custody, time lagta hai. But with a blockchain-based record, the thing is public. I have venture capital and other funds who are starting to get tokenized by themselves. As you can appreciate, the distribution of a tokenized fund is going to be so much more easier than a non-tokenized fund, with a benefit that the secondary market on funds opens up. Let's take other examples. If you're talking about establishing credit, or credit history, it is almost impossible for you to move your data from one place to another. But if you've got public blockchains, and of course with suitable controls, you carry around your credit history with you. And one of the reasons why people like Amazon and the other portals are able to give such good credit pieces is because you become data. And that's the benefit that you have got. I saw a business model where they were starting to tokenize our, all the students over here, they're going to graduate out, and IIM Shillong is going to give them a piece of paper saying they've got an MBA or postgraduate diploma or whatever the case might be. अगले 40 साल तक ही वो attest करवाते रहेंगे. I have to do it, even now. But if that is part of a blockchain, and there are models out there which are exploring this, you don't have to. So quite a lot of things are starting to happen and have already happened, and more is coming. It's all about getting out of that idea that you need to have a central agency to control these things. Once you move it into public, make it transparent, make it secure, quite a lot of these intermediaries which were there because of the inefficient processes will simply disappear.
Very well said, sir. Technology is technology per se, for good or for bad. It's human beings, those who have to decide. So I would now ask Unnati to open the forum for the question and answer. But I came to know that one of our panelists has to leave. I would like to say my another, because you guys have encouraged me. So I would like to say one more thing within the same framework. माना देती हूँ व्यापार की शिक्षा और करती हूँ स्टॉक समीक्षा, फिर भी है ये मेरी इच्छा समझ के समझ को जानो. So forum is open for questions and answer by students. Unnati, over to you. Thank you very much. Thank you, everyone.
Thank you so much, ma'am, and all the panelists. So anyone who has question can raise their hand. Yes, Tanuma, I think you can go ahead.
Yeah, good afternoon, sir. So my question was regarding, SEBI. So I have tried to build products, but every time, you build some financial instrument, you try to innovate, you see there is, some law or some rule by SEBI that prevents you to do that. Whereas ACC is very lenient on that, in that case. So do you see, SEBI being a little bit lenient going forward, or it will be like this, that we will have this tough regulation kind of environment that we have to deal with?
Can I take that? So I think, basically regulators at the end of the day, right, do have at heart the best interest of consumers in mind. Right. Obviously, implementation will vary from country to country based on their own personal experiences of policymakers, what the bigger political situation is, right, so on and so forth. Right. So it will take things take time for change, right? That is something that we have to accept, right? Having said that, regulators have started talking to each other a lot more, learning from each other a lot more, right? And we do see that in general, the direction that all the regulators across the world, they seem to be going in the same direction. Obviously, with consumer interests at the top of their mind, and anti-money laundering and other principles, right? Terrorist financing, all those principles. How do you prevent that at the top of their mind? But you will see, right? So like the example that I was giving before, right? Sandbox was something that was a concept championed by the regulator in United Kingdom and then in Singapore. and many other developed countries. And that is something that is already adopted in India. So like RBI has gone through 3 different cohorts of sandbox, right, where they have picked certain themes which are important for them, and really kind of enabled like multiple startups, right? In each cohort, I think they had like 8 or 10 of those startups to kind of enable those. So you will have to work under those constructs, whatever they are, like it or not, financial industry, because it's people's hard-earned money at this thing, right, will be under regulatory control. So you will have to just figure out how to make it happen. So that's where I'm sure ideas from growing leaders like you, right, you will figure out. It's not a really hard thing. You just have to work with people there.
Dr. Neelam, can I add to it a small thing? One thing is, keep in mind that when you are doing innovation financial products, one of the very, very, very important skill set you need to have is understanding the legal framework. Remember, finance is a creature of legislation. The piece of paper you call money is a creature of legal implication, right? The piece of paper, you call it currency, right? And therefore, don't think that you cannot do things prima facie. I would say not always, of course, but 8 to 10 times is because you need to go deeper into it to make it happen. And I give you a number of examples from India. When I did arbitrage in UK master share, no, you were born at that time, not, but there was a lot of arbitrage in UK master share with the markets, they changed the regulation. We did arbitrage in LIC policy. The government of India has changed the LIC Act in order to make sure that we constrain people like us, because we do absolute legal. We created a convertible bond market from India. We had about 83% market share of every single FCCB issued in India. And we contributed 1.2% of India's foreign exchange reserves. Why could we do it? Because we created the market in terms of within the frameworks. See, you cannot grow big by bending the laws. You grow big by understanding the laws and making maximum out of it. Right? We created the market into the whole CDS work, for the escorts work. Escort was a concept not known in India in those days. The RBI had to change not only the BRA, the Banking Regulation Act, they had to change legislation to make sure that there's no arbitrage left. Right? So don't be afraid. I have been into a point where government of India has changed regulation 3 times because of my businesses. So trust me, if you work hard, you can create business, you can create a subnational business and still work it very, very well. And as Vineet mentioned it, look, there are a lot of progressive government sector which will welcome you. If you think your idea is such a big concept, be the guest. Come on, come to Singapore, come to London, deliver it. But don't tell me you can't do it.
Neelamji, may I be excused? I have something else coming up at 12 o'clock. So
what do you say? Do you, sir, dil mange more, but let my students tell.
Yeah, if there's any question, happy to take that. Otherwise, you can excuse me. Yeah.
Thank you, sir. Thank you very much on behalf.
Thank you. Thank you, Sanjay, Vineet, and Bhaskar. Thanks a lot. Bye-bye.
There are a few more questions. I think the panelists will oblige us by giving some more insights. Yes, Soumya, please go ahead with your question.
So thank you for such an enriching session, sir. So my question is, lending is a risky business in India. With traditional banks facing NPAs issues currently, how do you think neobanks are best suited for this business, and while staying true to their ideals of financial inclusion?
Let me take a stab at it, simply because I've obviously worked for quite a lot of time in the banking industry. You are absolutely right. The NPL issues are coming from it. And you may very well wonder whether that is actually going to be a limitation or not. First thing what you have to recall is that you have to actually unpack the lending book to understand where the issues are coming from. Quite frequently, the issues that were coming from were from, for example, politically motivated lending, or even corrupt lending. That is a big one. The second thing was, I mean, although the situation now is substantially better, we really didn't have a bankruptcy protection or getting things back into the groove, selling off bankrupt assets. That regime wasn't there, and it's still work in progress. So what I'm trying to get to is that the traditional way of lending literally had certain features which made NPLs a feature. You make it difficult, you make it easier without any controls, or you can't actually turn around assets. Our legal system didn't really help. NPLs will rise. But what's happening with now, with the rise of digital lending, with the availability of many more data points, with understanding. So for example, you may very well find that an e-commerce website as a non-banking financial institution, because it's a closed loop and it knows everything about you, including your prior purchase behavior down to your day-to-day cash balances, invoices, both incoming and outgoing, has a much better idea about your credit risk, and they can lend it out. But more importantly, as the other panelists have said, I can lay off the risk quite easily as well. I can get other people to share the risk. I can securitize it. I can slice it. I can dice it. I can move it across. So lending as the literally the lifeblood of any modern economy is getting much more efficient. Yes, there is that entire box of NPLs that still needs to be addressed. But for new people, buy now, pay later is an example. Or if you're talking about people who are handing out corporate loans or consumer loans, or the loans that are, or the private capital that is coming in for customer acquisition, these are also loans in a way. So I think the risk appetite has improved substantially, and the credit risk is manageable.
So just to follow up, if you see the micro lending pattern in India, these are also not successful just because it leads to NPA. So do you think neobanks can handle that kind of pressure?
So look, I mean, I have to say that as a regulator, I tend to look upon these like sort of, with different perspectives. You have to keep one eye on the cat and one eye on the fish. You really don't know where things are going to jump. Now, first is, if the lending is driven by private capital, then the capacity for losses has to be adjusted by the returns they're going to get and the exit strategies for the investment that they have done. So they can actually take on much more risk, number one. Number two, micro lending frequently is supported by development finance institutions whose capacity for risk is orders of magnitude different from private lenders. And the last piece that comes up, as I said, is that just like lending has been democratized, risk layoffs also has been democratized. So you can spread out the NPA, the lending book to a much wider set of people, so that the hit, if it comes, does not hit that much. Now, going back to the micro lending piece itself, people are starting to use non-traditional data to judge the creditworthiness of it. So for example, they are starting to see what kind of airtime usage you are doing. It's a great piece. It's a great insight into customer behavior and creditworthiness. People are going to let go of quite a lot of things, but they're not going to let go of their mobile phones. And given the sheer amount of business that is getting done through it, if you are able to mine that information, you will be very, very, very good at judging the credit risk. So things are changing. Hope that answers your question.
Yes, sir. Thank you so much.
Let me, if you permit, let me add you 2 points to take away. One is what Bhaskar has shown is very, very, very important, because what we are seeing increasingly in India also is in terms of different tiers of your debt. In the good old Indira Gandhi days, we used to have consortium banking, all lending was pari passu, right? Today we have the senior secure, senior unsecured, unsecured tier 1, tier 2, tier 3s. We're talking about, contingent liability sector out there. That is a huge, huge space. So what Bhaskar was telling is very important, because once you can able to slice that particular debt book, There are people like us who's happy to buy the whole book because we can slice it in a different fashion altogether and make instruments out of it. Right? Look into CLO squares, cubes market, beautiful market to come. And second thing is what Dr. Neelam had told earlier. Remember, there is huge amount of social bonds coming into the world. Right? So for the social bond, the economic return is not as important into the social impact. And there's again a world altogether which can be tapped upon. And of course, India is talking about green bonds. Let's keep a finger crossed and see what happens there.
Thank you, sir.
Yes, I think Rakesh can go next.
Yeah, hello panel, good afternoon. My question is more on the lines of insurance and insurtech industry. So how do you look at insurtech as an industry evolving? Like, will they be like more like the standalone companies, or like probably be part of the insurance company's value chain? Something like they come in and play the role of come in and help in underwriting or compliance or anything on those lines, or like you look at them independently or something like that?
Let me try and take a first stab at it. The insurance industry, regretfully, compared to the very exciting things that I talked about before, has got a very long time horizon. तो उस पर दिमाग लगाना पड़ता है. वहां पर asset liability management का जो धंधा रहता है ना, you need to worry about it quite a lot, because you are talking about things that are going to stick onto your books, or at least somebody's book, for decades. So consequently, it is very, very tightly controlled, and to really innovate on that is tough, number one. Number two, you cannot talk about insurance without talking about reinsurance, which is a challenge. And the third thing that I'm trying to say is that because of the very nature of the things that I talked about earlier, and the other people have also said, the insurance market is starting to get a bit excited. So COVID was there anyway. I mean, for the first time in many decades, life expectancy has started to shift down. What a lot of countries have started to see that. Second secular trend that's starting to see is that the number of kids being born is starting to drop. Number three, because of climate change, vast swathes of industrial activity cannot get insurance. और जब आपको insurance नहीं मिलेगा, तो आपका तो धंधा immediately बंद हो जाएगा. Forget about financing. What kills a business is because you cannot get insurance or somebody to reinsure you. So generally, that is one of the reasons why insurtech by in itself is not that much of a hot area like what you would find in payments or in crypto investments, robo-advisory, etc., etc. But that is not to say that it cannot be done, especially for things on the consumer side. You have got lots of options there where you can definitely check out. So, you have seen what India has done. So example, Policy Bazaar or quite a lot of people who have come up. So there are niches where insurtech can be worked, but please be aware that that industry is very tightly controlled, very long-term in perspective, and not much changes very quickly. So startups generally find it a bit challenging to operate in that space.
Right. Thank you, sir.
Thank you so much, sir. And so coming to the end of the session, I'd like to give the vote of thanks. So as great Margaret Fuller said, if you have knowledge, let others light their candles in it. After listening and learning from this enriching discussion, I believe that like me, many of my colleagues were able to ignite their minds in the dazzling flame of knowledge. We thank our eminent panelists and distinguished moderator for making this session so engaging and enlightening for all. I'm sure that students of IIM Shillong now have a panoramic view of what this decade may have in store for India, and I believe we all keep these lessons in mind as we transcend through the dynamic and exciting challenges that our professional and personal lives throws at us. Before we call it a day, as a token of gratitude and remembrance, we'd like to present our distinguished panel with these virtual mementos. Ayush, can you please share the screen? for Dr. Bhaskar Dasgupta.
Thank you.
Now we have for Mr. Sanjay Guglani and Mr. Vineet. And lastly, we heartily thank to our moderator, Professor Neelam Rani, for enabling this enriching panel discussion. Thank you, and I wish you all a good day ahead.
Thank you. Cheers. Bye-bye.
Thanks. Bye.
Thank you very much. Bye-bye.
Thank you, everyone.